Last week brought about a change in risk appetite, with the markets showing some apprehension about the rise of new variants that threaten to slow down the economic recovery. Will this shift last? And is it likely to continue to dent the confidence of investors? This is the ActivTrades Weekly Outlook, where every Monday we analyze the economic calendar and identify key events, focusing on how they may impact the markets. Stay with us over the next few minutes while I look into how the week is likely to unfold. I will cover a range of topics, including the release of US inflation numbers for June, UK employment data, and the Bank of Japan's rate decision and policy statement. Much has been said about the risks posed by inflation and the Fed's reaction by bringing forward the dot plot by at least a year, with the tightening of monetary policy now expected to happen in 2023, if not before. However, as last week's FOMC minutes revealed, views within the central bank are nuanced, with some officials less keen on earlier tapering than others. So, this week's release of American inflation data, happening on Tuesday, will provide more food for thought for the members of the Monetary Committee. It will surely also capture the attention of traders, who will be keen to measure the behavior of consumer prices and try to anticipate the impact the release of such data can have on the sentiment of Fed officials. The consensus amongst analysts points to a year-on-year inflation rate in the order of 4.7%, which would represent a slight deceleration comparatively to the previous reading of 5%. A number disappointing to the downside would be likely to weigh on the dollar, while a higher than expected figure could propel the greenback to fresh multi-month highs. On Thursday, the UK's Office for National Statistics will release the unemployment rate and claims relative to the months of May and June respectively. The figures will provide a good illustration on the state of the labour market in Great Britain and are likely to impact the performance of the pound, as the health of the job market is one of the indicators the BOE looks at when deciding on monetary policy. The release of UK manufacturing and services numbers last week, as well as GDP data for the month of May, disappointed the markets, with growth of only 0.8%. This is half of what was expected. After some losses in the immediate aftermath of the announcement, the pound rebounded, hitching a ride from rising risk appetite in global markets during Friday afternoon. Overall, sterling has been fluctuating between the resistance at $1.38 and the support at $1.37, with the markets showing some indecision despite the UK's government's decision to fully open the economy on July 19th. So, unemployment figures will hopefully provide more clarity on the state of the British economy and create more direction for the currency, at least in the short term. We'll end our weekly preview by zooming in on the Bank of Japan's monetary policy statement and interest rate decision, which will happen in the early hours of Friday. No changes are expected in the perennially dovish BOJ stance, with the rate pretty much guaranteed to remain negative, as it has done for years now. Still, the devil is in the detail, and in the current environment, which can be characterized by market indecision over whether or not to feel optimistic about the outlook for the global economy, the tone of the statement may end up impacting the sentiment of investors that recently turned to the yen, giving it the best week in relation to the US dollar since April. After a couple of soft months, the Japanese currency bounced back, as investors' concerns over the emergence of fast-spreading variants that may end up hindering the pace of the global economic recovery increased the safe haven appeal of the yen. With Japan remaining one of the world's largest economies, it will be interesting to see how the views of the BOJ officials fit into the current global narrative. This is all for today. We will be back next Monday for another weekly preview. In the meantime, please go to ActivTrades.com for more market analysis. Do subscribe to our channel so we can keep you updated with the latest in the markets, and don't forget to click the like button if you enjoyed the video. Thank you very much for watching.